Hey everyone. One of the questions that I get asked the most is, do we only trade SPX? And my answer to that is yes, like 95% yes. I don't want to say we never trade other tickers because we do, but I don't trade much else because SPX 0 DTEs is all that I really need to make a consistent weekly income. If you're watching this video, you know that there are hundreds of ways to make money in the stock market. But all you really need, and I implore you to just pick one and then focus on it and get really good at it. And the rest of the strategies will just kind of fall away. There's a saying, right? A jack of all trades is a master of none. So while I like to think that I'm not great at penny stocks or scalping or covered calls, earnings plays, I mean, there's so many strategies, right? While I'm not great at any of those, I'm a master of SPX 0 DTEs, and that's really all that I need. So this video just recaps a very typical week of the type of trading that I do along with Rick and Joe, who I run Axe Options with. It's 3 trades, Monday, Wednesday, Friday. A pretty good entry, a pretty bad entry, a pretty stressful heart attack type of an entry. I'll go over each of the days that we took those trades, and I think I said in my last video, but some days we do 2 0 DTE trades when there's an opportunity that presents itself maybe on the latter part of the day. Like last week, I know we did 4 trades, and I meant to record a YouTube video last weekend, but I didn't get around to it. But I do try and post like a daily recap on our Facebook and Instagram pages. So if you want to follow there, you can, I'll put the links in the description box below. Otherwise, here are the trades.
All right, here is a 5-day, 15-minute chart for SPX. And I put on here our 3 trades this week: a put credit spread on Monday, a call credit spread on Wednesday, and an end of day put credit spread on Friday. Right, let's look at Monday on a 5-minute time frame. And I will show you the order, how it was alerted, so you can ignore this. But at 8:04 a.m. Pacific Standard Time, we entered a 33.20, 33.15 put credit spread. All we need is for SPX to close above 33.20, and we get to keep the entirety of the 50 cents that we receive upon entering this order. So when you're looking at this chart, this is the candle that we alerted that entry on. And of course, now looking back, it was the most perfect entry for a put credit spread that day. But let me give a little bit of background as to why we entered there. So here's where SPX closed on Friday. Here's where SPX opened on Monday. And as per usual, we expect the gap to be filled. This candle comes down and almost closes the gap, but doesn't. And in the past, we have seen days where SPX will come close to filling the gap, but then doesn't, and ends up running the rest of the day and doesn't give us a good entry or no good pullbacks for a good entry. So I know there was some hesitation on this morning as to whether or not we missed a good entry here, but we were patient. We waited. I think Joe knew that there was going to be a more significant pullback and knew not to enter on this candle or this candle. So we're waiting here for the first green candle. Okay. And if you look at this candle, you can see that it has a long lower wick. So when this candle is forming, we can see toward 802, 803 that this candle is going to close green. And because it has that like long wick on the bottom, you know that bulls are trying to drive the price back up. So we knew bulls were coming in at this time. So we enter, and then we end up getting out we put in our 10-cent order as per usual, and it ends up filling at 8.52 on this nice move up. So of course we could have held it the entire day and taken a max profit, but we didn't because it was so early in the day, and we just wanted to take the risk off of the table. Sometimes more time in the trade just equals more risk. So that was Monday. Here is Wednesday's price action in 5-minute intervals. And on this day, we enter a 33.90, 33.95 call credit spread. So long as SPX closes below 33.90, we get to keep the 65-cent credit that we take in upon entering the order. And the time disappears here. So I was filled at 7:30 a.m. So somewhere around here, we're getting bearish. Because why are we getting bearish? Because we have the gap in mind as usual. On Tuesday, SPX closes here. On Wednesday morning, it opens here, and we're expecting price to pull back into this area. So around here, we're thinking that SPX is going to come back down into this area and we'll be out of our trade. It doesn't do that. It ends up turning into a winner because it stayed below this price, but we ended up being in the trade the entire day, and it made for a stressful day because it kind of hovered here near our bottom strike price for the entire day. And because of that, the premium did not decay. So we take in 65 cents, and on any other day, as time goes on, we sort of expect the 65 to turn into 60, and then 50, and then 45. And, when the day moves on, the decay accelerates and our premium price gets closer to our 10 cents. But on this day, it doesn't. And it just made for a pretty stressful day. I ended up not getting filled on my 10-cent order until this candle here. So this was a long day of pretty stressful trading because it wasn't that we were on the wrong side. It's just that we were in this range. We're trading in this tight range and premium prices just weren't decaying. And so sometimes it just doesn't work out that nicely. But this day, looking back in hindsight, is kind of like a day from a 2019 spread, where we have not a whole lot of price action. You pick a direction in the morning and you just let it ride out, and you're not expecting these huge swings. But in this environment, we are expecting huge swings. So even though, we were in the trade all day, and we even, got pretty close to our strike prices here. Like even at this point, our stop loss rule is typically 3x. So if this would have reached like $1.50, $1.60, we would have been worried. But it never even reached $1.20, so we never even got to 2x. So it was a tough day to trade, but at the end of the day, it was a winner. All right, moving on to Friday, August 14th. So if you are a member of our room, you're probably having nightmares about this day. It was a tough day to trade. So as usual, in the morning, we are expecting the gap to fill, and we're getting these huge candles. I mean, this type of price action is untradeable. It's very hard to find an entry and a direction when you have candles that keep canceling each other out. So we couldn't find an entry here. We had an upward bias on the day. Fridays do typically rally, but we are also expecting a little bit of a correction. And so we were looking to enter a call spread in the morning. And then somewhere around this time, we give up and we forego taking a trade in the morning. So now around 10:30, 1:30 Eastern time, we are looking for either a plunge in, price action, or a significant enough pullback where we can get that 50 or 60 cents premium and then ride up the rally at the end of the day. So this candle comes, great. That's a pullback, but the timing's not right. It's a little bit too early. This candle comes, even better. We're making lower highs. This candle comes and it has that significant tail. So we think this is a great time to enter the put credit spread. So we alert at 11:35. The 3365, 3360. Actually, we first alerted a 60.55. So imagine this purple line, 5 strikes lower. I mean, looking at this candle and looking way down here and thinking, wow, this is safe. There's no way that SPX is going to pull all the way down this way. So the problem is on this next candle, it started to rise up, so nobody could get filled. So that's when we moved the strikes up to the 60, 65, so that we could get that 50 cents. Ends up being a terrible decision, and I'll show you why. Let me just, so most of us are filled somewhere in these two candles, and then, whoa, that doesn't feel good. Neither does that, and now we are panicking. I mean, this does not sit well. Okay, so even with my small position size, what did I fill? 10, yeah, 10 at 50 cents. Well, I end up adding two more at 85 cents. Anyways, you know, at this point, I'm already at a 3x. I'm already looking at over $1,000 of loss. It doesn't feel good, but I remain confident in the fact that Joe and Rick have a lot of experience and are confident in that it's going to, it may pull down here, but it's going to close above here. So yeah, that happens, this happens, and we're kind of in a world of hurt. This does not feel good. With only 35 minutes left in the trading day, at this point, I'm asking myself, do I want to just cut my losses here, which since the strikes have already breached, I'm probably looking at maybe 50%, 50 or 60% of my max loss. Like I said, my max loss is $4,500, so maybe a $2,100 loss around this point. Or am I going to roll my spread? So pick a date next week that I can find a credit to roll my spread to. But of course, that ties up my capital. I'm still in the position. I'm keeping the same put credit spread bias. Like, am I still going to be bullish on SPX next week? I don't know. Or am I just like buckling up for the ride? So spoiler alert, we stayed in the trade. I'm just going to go through these candles one by one, and yay, this green candle comes. There's a little bit of confidence, but not really, because anything can happen in 20 minutes. And we need it to close like 1 penny above this 3365. And then this candle happens. And, you know, this is just like the stuff nightmares are made of when you're trading credit spreads. But let me just fast forward to this one candle. This is the stuff dreams are made of. This candle is an insane candle. I mean, I'm not even sure when the last time we had a 10-point candle in a 5-minute time frame is, but I can tell you the wave of relief that came over the members who had managed to have the gall to stay in a trade like this rescued us all. And here's how the day ended. It pushed up, and this was where SPX ends up closing at 3372, far and above our strikes. But it was not easy. It ended up being a winner, but it didn't feel like that. So kudos to those of us who tolerated the stress level that was required of this trade this day. So yeah.
All right, there you have it. Those are my trades for the week. I know when I was recapping that, filming that, I didn't actually talk about the dollar amounts, how much I made. So on Monday, I filled for 50 cents. I exited for 10 cents. I did 10 contracts, so that's $400. On Wednesday, I filled for 65 cents. I exited at 10 cents. That's a net gain of $550 on 10 contracts. And then on Friday, my first order went in 10 contracts at 50 cents each, which I let expire worthless. So that was $500. But then I added to, when the premium got a little bit higher, added too soon, obviously, but I added to at 85 cents. So those two I let also expire worthless. So that's an additional $170 for a total of $1,620. And that's not using more than $5,000 of margin or of my capital. So that's roughly a 32% return on my capital in 1 week, in 3 trades. So there you have it. I hope you found some value in the video. I know I'm not digging into like any really deep technical analysis. I guess I'm just thinking that my viewers here are newer traders, and I'm just keeping it at a high level overview. But what I really hope that you take away is that all you really need is one trading strategy that fits your lifestyle, your account growth goals, your risk tolerance, and that's all you need. Thanks for watching, guys. Please let me know if you have any questions, or you can email me at the email address below. Thanks. See you next time.